Hey, welcome back. It's great to see you. Thanks for tuning in.
Hi.
Last week's conversation revolved almost entirely around interest rates.
Mhm.
And this week is going to prove to be no exception. We just had two reports over the last couple of days that were fairly instrumental. Yesterday, the CPI report was released. That's the Consumer Price Index report, of course, and got some favorable news, we think. The inflation rate between October 23 and November 23 was just 0.1%.
That's good.
And also, great news was that the inflation rate between November of 22 and November of 23 was just 3.1%.
Really
I
good.
think, a very good news. The other report that was just on the news moments ago was that Chairman Jerome Powell just announced that the federal funds rate would go unchanged. And of course,
Okay.
that's three times in a row that they have not made the change to the federal funds rate. This is their last meeting of 2023. So we won't see any more increases this year.
That's so good. It's good for everybody.
It sure is.
And people often ask us, why are we watching all these numbers? Well, the Consumer Price Index, it talks about the cost of goods and services. So what was happening is that everything was going up in price so quickly. Um, Home prices were up 20%.
Yeah.
Used cars, everything was
It was
going
proving to
crazy.
be difficult.
It was getting out of hand. So they decided that they were going to raise the federal funds rate to kind of slow things down before they got out of control. And finally, we're seeing things working out. In the last 10 days alone, interest rates have been below 7%,
Yeah.
which is really good for everyone.
No, it's been acceptable. And just to, just in relation, just to show you what changes have occurred in just the last 12 months, we were looking at the inflation rate, and this would be, of course, the numbers for 2022. Ironically, 12 months ago today, we read this report, and from October 22 to November of 22, rose just 0.1%, very similar to what we just
Mhm.
experienced. But the big change was from November of 21 to November of 22, it had risen over 7%,
That's crazy.
7.1% to be exact. So, again, 12 months later, big changes were made, big changes have occurred, right?
Yep, and really good news.
Yeah. Well, the other bit of news that was just released as well to us were the November 23 market statistics, right?
Yes, and this comes to us from Market Stats by Showing Time, and it's looking at housing data for the end of November.
Yeah. All right, let's go ahead and get started. The median sold price for November 2023 was $628,645.
I love that 45.
Yeah,
I
that's
had to I
645.
had to check that number like 2 or 3 times.
So glad you did.
But actually it means the median sold price for homes in Northern Virginia is actually up 1.4%, which is a good steady.
Yeah, prices are holding steady.
They are holding
Right.
steady.
The number of homes sold in November was 1,816.
And again, this is down 12.6% and speaks to the low inventory that we have.
Yeah, it does indeed. The number of days on the market, and of course, that would be the days from the time that the property went on the market in the MLS to the time that it went under contract, was 20 days.
And that is actually up 3 days from the previous month.
And last but not least, the number of homes currently for sale within Northern Virginia is 2,468.
And again, this is down 15%, which is slow.
Yeah.
It could be partly seasonal as well, but it's definitely lower than than the previous month.
Well, I guess, again, I think the bottom line for all of this is that the market is still holding strong and steady, especially when you take into consideration the time of the year, right?
Yeah.
The season that we're in.
Yep. This has traditionally been a time when real estate kind of slows down a little bit. Everybody's enjoying the families and the holidays and the parties. So
Yeah.
this is a traditionally slow time. But I think it's really good to see, and even the Federal Reserve Chairman talked about the real estate market, and he used the word flattening, meaning it's just steady. It's not it's not bad, it's not good, it's just steady at the point. But I think it's all positive. The fact that these rates aren't being increased anymore, I think will bring the mortgage interest rates down, keep them down. And it's good for buyers because it means they can afford to buy homes that previously they couldn't when it was 8%. You know, it's finally coming down a
Yeah.
bit. And for home sellers, they feel confident putting their homes on the market, knowing that their home is holding value.
Yeah.
It's not going down.
And then, as we discussed last week, there's going to be more buyers in the marketplace as affordability has improved. There's going to be more buyers in the marketplace. There's certainly a lot more optimism within the marketplace right now than we've experienced in quite some time. Even as we go into the holidays, of course, the holiday buzz gets everybody excited. But we are seeing that there are positive signs. I mean, the reports that we're talking about today are all indications that we should see hopefully a good market, a good strong market in 2024.
Yes.
Well, as always, we hope that your time with us has proven to be very beneficial. We encourage you to subscribe to our newsletter and make sure you check out our blog on our website.
Yes, lots more information there. So thanks for tuning in.
We'll look forward to seeing you soon.
Bye.
Bye bye.